Hello everyone and welcome to the 17th episode of the Daily Gwei AMA series where I answer questions from the Daily Gwei Discord community. If you want to ask your questions for the next AMA, you can ask them in the AMA series channel on the Discord channel, and if you want to go back and read all the questions as I'm answering them, you can go do that as well. The video will obviously have timestamps which you can check out too. But without further ado, let's get into the questions. So the first question here comes from Wakaro, who says, "Hey Anthony, thanks for doing this. I'll kick off the question for the next one. From Ethereum.org here, wondering if you have any thoughts or suggestions on how we could continue to improve Ethereum.org as a community resource, especially with ETH being sunset. Curious if you've noticed any gaps in the information on the site or have any suggestions for future content." So I've been on record multiple times saying how much I love Ethereum.org, and it's kind of one of the reasons why ETH was sunset was because Ethereum.org just became such an awesome resource. There's a whole team working on it. It's obviously open source, so people can go and contribute to it as they like. And ETH was really something that was, I guess, like a bridge to that, because back when we started ETH, we being Eric and I, it was because Ethereum.org was still very outdated. But I would say Ethereum.org has some of the, if not the most up-to-date information on Ethereum today. I mean, I can't think of another resource that has as much information about Ethereum as Ethereum.org has. In saying that, there are always more things that the website could be adding. Now, I don't know, I haven't gone through every single page, every single section, and done like a detailed overview of the website, but I think that branching out, and maybe you guys already do this, but maybe branching out beyond just the website and doing YouTube videos, maybe doing a podcast, maybe doing doing videos on EIPs or teaming up with the Ethereum cat herders and promoting them. I think you guys already do this, probably have your bases covered there. But from my experience, what people really want to do is they want to dive deeper into things. They want to learn about the Ethereum governance process, exactly how it works, Ethereum's monetary policy, how it came to be. Maybe stuff about the history of certain parts of Ethereum would be good to add to the website as well, because there's a lot of history that I think people get lost on. They don't understand why, the Ethereum is the way it is, why we're doing things like the rollup centric roadmap, for example. And I think maybe adding some context around that would be valuable. But in saying all of that, as I said, Ethereum.org is already an amazing resource, but I haven't gone through it with a fine-tooth comb. I guess, like, if anyone in the Daily Gwei Discord channel has any answers for Wakaro here about what could be added to the Ethereum.org website that isn't already there, be sure to tag them in the Discord channel, maybe in the Ethereum channel there, and he'll probably, or he or she, I don't actually know who this is, will be able to reply there. All right, moving on. So there's a couple of questions here from Merlo, who is one of our resident accountants in the Daily Gwei Discord channel. So they start off by saying, "Vibe check. Do you see value in a suite of free educational content on crypto taxation being made available to the general public? Or do you think most people would prefer to rely on their trusted tax advisor to give them answers? And do you think people would contribute funding to something like this?" So it's kind of hard to say because it really does vary greatly, I guess, like from individual to individual, from country to country. But for me, like, just giving my perspective here, even if I had like all the information available to me, I would still seek advice from a tax professional. I would still go out there and ask them questions, because I don't trust the information written down as much as I trust the person telling me about these things. Now, obviously, my situation is unique to me. I probably have a very different situation than a lot of people in crypto. The way I'm in Australia, right? Most people in crypto are not in Australia. I have various ways of I've set up my finances in various types of ways that probably other people haven't done so. So it is a unique perspective that I'm giving here, from my own perspective here. But yeah, in saying that, I think that most people, when they're looking at these resources, they just want certainty. They just want something to point to where they can, in case they get audited or something, where they can be like, this is the guidance that I was following. And you're always going to feel safest when it's someone who is regarded as a tax professional, for example, giving you that advice. And that goes beyond just advice on what to claim, what not, what you can claim, what you can't claim, how this is treated, how this asset is treated, how this asset is treated for tax purposes. It goes beyond that into the realm of how to optimize your tax, right? Whether that be setting up different kind of things like trusts to optimize your tax, or how to tax loss harvest in the most efficient way, what to claim in the most efficient way, how much to claim, how to avoid kind of overstepping your bounds and increasing your chance of an audit, increasing your risk of an audit, and basically generally playing by the rules, but making sure that you get what you're entitled to, and you only pay what you're required to. I think those are the biggest concerns people have, but it will vary from individual to individual. And to answer your question, after giving that, I guess, context there, I think it's still valuable for these resources to be made available, especially if they're done on a I guess, like country by country basis, where they apply to the various jurisdictions, whether, within that country or for that country itself. But I don't know if people would contribute funding to this. That's the thing. Like, you could kind of reason about this and say, well, if people are expected to contribute funding to this, then maybe they would just spend that money on getting their own personalized advice instead of funding something like general advice that everyone benefits from. This is maybe that's a selfish thing to say, but I think that depending on how much it would cost to fund something like this or how much it would cost to buy something like this, it would have to be like a cost-benefit analysis for a lot of people on this front. But I do think it would still be valuable for people, because I mean, in my case, I do look at the guidance online. Say I go to the Australian Tax Office website or the ATO website, and I look at the guidance that they've given, and I look at they've got a forum where they answer questions. I look at that and I'm like, okay, well, this seems legit. This seems correct. This is how I think about it. But there are other things where I see it and I'm like, no, I don't agree with this, right? And if I don't agree with it, I have to go to a real person, my tax accountant, and say, hey, I don't agree with this for this and this reason. Are we able to do this as this? And then if there is an audit later, or if I get questions about this, can I back it up with this argument? And obviously there are different ways of doing that as well. Like, there'll be simple questions that you get asked to justify things on, but then if the ATO wanted to, they could take me to court and I would have to defend my position there. So it definitely gets very murky when you start going into that realm of things. But I think general advice is fine, and advice for the general public is fine. But I just feel like most people would probably feel more comfortable talking to a person, especially if it's not going to cost them a lot to do that, because I mean, obviously costs can vary, but if you're just wanting to go and to get like someone to do your taxes for you rather than you doing it yourself, that doesn't cost too much to do, right? And it probably saves your ass, and you can probably claim things you didn't think you could claim. You probably save taxes in places you didn't think you could save taxes. Maybe you end up paying more than you owed because you missed stuff. But even that's a positive, because you don't want to be missing stuff, right? You want to be making sure that your tax return, or I guess like the taxes that you filed, I should say, are as accurate as humanly possible, so that in case you get audited, you are covered from that. Because one of the worst things that can happen is you get audited, because it's guilty until proven innocent. In that case, you have to, like, if the tax office really wants to push it, you have to prove to them why you aren't guilty, basically. And in their eyes, you are guilty, depending on what kind of audit they do. But if they literally say to you, hey, this is, you have to explain this to us. Like, this doesn't make any sense to us. How did you buy this when you only claimed this much income for the year, right? And they kind of do that. They do that a lot, actually, with they do pattern matching, and they have their algorithms that they run. They have their searches that they run. Obviously, Merlot, being a tax advisor, would know this. But yeah, hopefully that answers that question there with a bunch of nuance of how I think about it. And then you followed this up by later on by asking, do you see new and existing crypto participants trusting an advisor, such as an accountant and financial planner solicitor, to assist with asset custody? Now, this is a funny topic, because I don't think so. At least personally, I don't trust anyone with asset custody except myself. And I have my own solution for this. And I'm not going to tell people what the solution is, obviously, but I actually don't trust anyone but myself to custody my assets. And I guess, like, there are other things that people do, like they give part of their seed phrase to the family member, or they do social recovery stuff. But in my case, I mean, it's not that maybe I should take a step back here. It's not that I'm the only one custodying my assets, but I do practice self-custody, in that it's not on a centralized exchange. It's not in some centralized service. It's not with a third party like a bank or something like that, where they could unilaterally have control over it. My custody setup is pretty involved, and it definitely, obviously, nothing's foolproof, right? But it definitely works for my needs, and I think everyone can tailor one for their needs. But yeah, I wouldn't trust any other third party, like an accountant or a financial planner or a solicitor, to custody my assets. I wouldn't even trust a bank. I don't trust bank deposit boxes. I sometimes get questions from my real life friends who say, why don't you just keep your ledger or your hardware wallet in a a bank safety deposit box. I'm like, well, no, like I know that they're in theory secure, but in, and in practice they're secure as well to an extent, but still, that's still trusting a third party. And then they say, oh, why don't you put your seed phrase there? I'm like, no, no way am I going to put my seed phrase in a bank deposit box where I have zero visibility over it unless I go there, right? Like, okay, yeah, the bank is relatively secure, but it's still not enough for me. Like, I'm not going to put a seed phrase that has access to my funds into a bank safe deposit box. That's just not what I'm going to do. But maybe other people are different here. And then it brings up the question of, I guess, how can this scale to the world? Like, most people aren't going to do self-custody. That's fine. Like, I've always reiterated, that's actually fine. Like, I don't expect most people to do what I do, but I personally just don't trust third parties to custody my assets for me. And I think we have a lot of evidence from last year as to why this is the case, right? And why this should be the case for most people. If you can, and if you have the means to self-custody your assets, you should be doing that, in my opinion. And then Merlo, you continued by saying, by no means should they be holding a client's keys on their behalf, but I can see potential for them to be on a multi-sig on a client's Gnosis safe or a Guardian on a client's Argent wallet. This I agree with for sure. If they don't have unilateral control over the assets, then for sure. Like what I meant before when I was saying I wouldn't trust them, I wouldn't trust my accountant, financial planner, solicitor, whoever with my seed phrase. I wouldn't say to them, hey, keep this safe for me. No way. And I don't think you were saying that either, but I figured that was worth clarifying for people. But having them on a multi-sig, that would be fine, I think. That'd be actually pretty cool because you could have, for example, your accountant on the multi-sig. You could have your, I don't know, if you trust your mom and dad, you can have them on there, or your siblings, or your wife or husband, whoever else, right, on there. And then, unless your wife, if you do like a 2 of 3 multi-sig, for example, and the 3 signers are your spouse, your accountant, and yourself, unless your spouse and accountant colluded together to get that money off of you, then you'd be fine, right? But in saying that, like, it gets murky because your spouse also has access to those funds as part of being married to you, and so it starts getting like murky there. And then your accountant maybe they run off with your funds. There's always a risk, right? Like I'm not trying to paint a picture of some bad romantic comedy, right? But there is always a risk there. But you can do like a 3 of 5 multi-sig. You don't have to do 2 of 3, where you could have like your best friend, your spouse, and your accountant, and you on it, right? So they would all have to collude against you for you to lose your funds there. There's always a risk, but yeah, I think multi-sigs are great. I think they're perfectly fine. There are plenty of people in crypto who have lots and lots of money in crypto that use multi-sigs, and it's been fine for them. So yeah, I don't see any problems with that one. But yeah, hopefully that answers your questions, Merlo. Moving on to the next one that comes from, let me just scroll down here, comes from Cuz, who says, I plan to stake my ETH after the Shanghai upgrade when withdrawals are activated, but I definitely won't be able to place equipment at my home. I travel all the time, and my best option would be to buy myself a remote server. So there are 3 questions here. Can I use a remote node such as Amazon servers to become a validator? I understand that this is not ideal for decentralization in general. Well, yeah, okay, obviously it's not ideal for decentralization in general, but if you are a frequent traveler and you are worried about your machine, not being able to access your machine at home in case of something like a power going out or your internet going out, and you have to physically reset something at your home and no one else has access to that, then yeah, I mean, using a remote service such as Amazon Web Services or another cloud provider is totally fine, as long as you understand the risk. It's not just the decentralization hit that happens here, it's also a custody risk, because by having your validator on Amazon, your Amazon basically owns your validator, so to speak, right? There's a custody risk there, even though it's a low custody risk. Obviously, there's a low chance that Amazon's going to try and steal your assets or rug you, but then you also run the risk of someone else accessing your server because they got access to your password, for example, got access to your account, got access to it, even though you have 2FA on it. So there's always that risk there. In saying that, if you do have a way for someone to physically go to your home and reset something if it was required, then you can still stake from home because it's quite resilient. So what I mean by this is that even if your internet goes down at your home and then just comes back up like 10 hours later, your validator will still be running. It'll resync with your node. It'll catch up to the head of the chain, which shouldn't take long after even like a 24-hour outage, and then your validator will keep ticking along. You can set up alerts for this. There are various websites that let you set up alerts to see what happened if your internet went offline, or if your power went off. Obviously, in the case of your power going off, it's a bit more difficult unless you have some kind of setup that allows your PC to automatically restart itself, and then it would require someone physically going there. If you don't have that set up, in order to switch on your PC and make sure it's all well and good. But yeah, generally, even if you're traveling, it's quite forgiving. I mean, I've traveled, what's the longest I've traveled without, away from my node before? I think it's 2.5 weeks or something without my node, and everything was fine. My power didn't go out or anything, but I have an uninterruptible power supply as well, and I have a backup internet connection, but everything was fine. My validator kept running all well and good, but you can use a remote node. That's totally fine. And your second question, I want to stake more than 32 ETH, at least 100 ETH. Is it possible for solo validators to stake more than 32 ETH? And if so, how can I do it? So you can stake more than 32 ETH, but doing so on a single validator is worthless. It doesn't actually do anything. So each validator requires a minimum of 32 ETH, but if you add more than that, you can technically, but it actually doesn't do anything. It doesn't give you extra rewards. Your rewards are still going to be the same, and it's basically dead ETH. So what you want to do is that if you have 100 ETH, well, that doesn't divide exactly into 32. You'll be able to get 3 validators out of that with some ETH left to spare, but you would set up 3 validators with 32 ETH each on them, and then your ETH that you've got left over, I mean, you could stake it with a third party. Maybe you want to buy some rETH, or you want to buy some other LSD. You could do that as well, and it would technically be staking too, but it wouldn't be solo staking, obviously. Basically adding any more than 32 ETH to a validator does nothing, and it's dead ETH. It would literally just sit there until withdrawals are enabled. Then you'd be able to withdraw it, but you'd have to, from my understanding, exit the whole validator, which would cost you time of getting rewards. So you just don't want to do that. So just send 32 ETH to the deposit contract. Don't send any more than that when you're setting up your solo validators. And thirdly, if I can't become a solo staker with a remote server and to stake more than 32 ETH, what do you think about rETH? How safe is it, and could it be a good alternative for someone like me who travels the world all the time? I know about the rETH premium. We'll assume I buy rETH when the premium drops. So I think it's an excellent solution because Rocket Pool really is the only decentralized LSD out there. I mean, disclaimer, I run a Rocket Pool, 6 Rocket Pool mini pools. I am an ODAO member, so I'm a little bit biased here, but I only did that because I really believe and trust Rocket Pool that is actually decentralized, that it's totally fine to stake with. So yeah, I mean, if you don't want to use a remote server, if you don't want to be a solo staker for any other number of reasons, then I believe purchasing rETH is probably the next best solution if you don't want to run the hardware and software yourself. And I think it's the most decentralized solution out of all the other solutions out there today. So you can definitely do that. But yeah, hopefully that answers your question, all of your questions there. Thanks for answering them. They were great questions. All right, on to one from Vedantan.eth here, who says, can you please walk us through a future state of how all these ETH building blocks come together, such as DeFi, ENS, NFTs, etc.? How will our web meta experience enhance due to this innovation? So the way these building blocks come together are the way they've already come together on Ethereum. So things like DeFi protocols, right? The smart contracts, they are the building blocks. They are the foundations that everything else is being built upon. So your Uniswap, for example, is the foundation of most of the swapping infrastructure that happens on DeFi. So for example, if you need to if you liquidate a position on Aave and you want to swap out of those assets, you're going to be using, maybe you use Uniswap directly, but maybe you use an aggregator, but you are going to most likely be using a Uniswap liquidity pool, which is a smart contract, which is a building block there. And that's obviously a core part of DeFi. And then, things like ENS, I mean, we already use these in our day-to-day lives. If you want to send ETH or any other token to someone, you can get their ENS name and easily send it to them without having to get their Ethereum address off of them and then make sure it's the correct one, copy, paste it across. You don't remember it. If you want to send ETH to me, you can just send ETH to sassel.eth, right? And I'll get it. And you know that that's tied to me because I verified that on Twitter, and I can verify it on chain as well. I can sign a message if you really wanted proof that I own sassel.eth, right? And that acts as a building block to basically make it so that everyone on Ethereum, everyone who has an Ethereum wallet and everyone that interacts with layer 2s as well can use their ENS names to do so instead of an Ethereum address. And the NFTs, I mean, NFTs benefit from DeFi as well. They benefit from all these building blocks. You can send an NFT to someone's ENS name instead of an Ethereum address. You can trade NFTs or put NFTs up as collateral collateral within DeFi. All of these work together in tandem, and because they're all built as a backend, so to speak, and as those foundations, anyone can build whatever they want on top of it and can daisy chain these things together, can build their own protocol on top of it. Can build a front end, for example, like anyone can build a front end on top of Uniswap contracts. Anyone can build their own registrar for ENS, from my understanding, and anyone can make their own NFTs or make their own NFT marketplace, obviously, because the NFT standard is an ERC standard, just like the ERC20 standard. It's ERC 721 and ERC 1155, if I remember correctly, and ENS is obviously following the NFT standard because ENS names are NFTs as well there. So in terms of like enhancing our existing experience, our existing metaverse and web experience, I think that one of the biggest things is sign in with Ethereum, right? Like where we can basically have these existing Web 2 services allow you to authenticate with Ethereum, and then Ethereum holds your data, so to speak, right? Holds your social graph. And a perfect example of this is all the that exists in Web3 are all the decentralized social media profiles or services or protocols, I should say, that allow you to sign in with Ethereum, sign in with your Polygon address, sign in with an L2 address, which is, I guess, like the same thing as your Ethereum address, and allow you to have your social graph tied to that instead of it tied to a centralized server. And that's really powerful. Like, for example, you can imagine a decentralized Twitter. So let's say Twitter, but decentralized. Instead of Twitter having Twitter's database having all of your information on there, your social graph on there, all the algorithms on there, what would happen is that the all the social graph stuff would be tied to you. It would be tied to your Ethereum address. It would be on chain, and then you could bring that with you. So say you didn't want to use the official Twitter front end, you wanted to use another front end that taps into the same social graph that the official Twitter does, but it's tapping into the social graph that you bring with you. That means you can use different Twitter interfaces because the backend is decentralized. The backend is on chain, and these services could use different algorithms. They're not just they're not just forced to use Twitter's algorithm, for example. So all of this comes together, and all these building blocks will come together to enhance that experience as well there. But yeah, there's plenty of other examples here, but I don't want to spend too long naming through them all because I could go on for a while there, but hopefully that answers your question there. All right, one here from G. Garby who says, is Ethereum scaling on L1 out the window now, or devs are researching some ways to do that too? So it's not out the window, it's just changed. So traditionally, or I guess like for quite a while, there was this notion of scaling Ethereum layer 1 via sharding. Now, this included splitting up the blockchain into 1,024 different shards that would be able to scale the blockchain 1,024 times, essentially, right? And this was the understanding that people had for quite a while. But then as things went on, as we got better at understanding how blockchains could scale, Ethereum switched to something called the rollup-centric roadmap, where essentially Ethereum Layer 1 is being built to serve rollups as part of scaling Ethereum. So what this means is that sharding got changed into something called Danksharding, which has two parts to it. There is proto-Danksharding and full Danksharding. Now, the main difference between Danksharding and the old world of sharding is that we're not splitting the blockchain up into different parts anymore. What we're doing is we're doing data sharding only. So it's just a place to store data on. It doesn't do execution of smart contracts, for example. And we're doing something called data availability sampling on that, where a subset of data can be validated by validators. So not all the validators have to hold all the data at once, but then you can sample that and be sure that the data is available. Now, this is quite complex. I'm probably not doing the best job of explaining this right now, but that is what we pivoted to. Basically, that helps layer 2 scale because layer 2s are very data hungry, and all the execution of transactions is done at layer 2 instead of layer 1. Now, recently, we came up with something called proto-Danksharding, which is going to hopefully be shipped this year, later in the year. This is called EIP 4844, which basically what it does is it creates a new transaction type called blob type transactions, which allows layer 2s to use as space for their call data. Or I guess like for their data space, right? And what this does is it scales layer 2s by up to 10 to 100 times in that initial rollout that we're doing for proto-Danksharding here, and basically means that the L1 is servicing the L2. So that blob space can only be accessed by these L2s or by these rollups. It cannot be accessed by users on layer 1, by regular users on layer 1, I should say. There's a specific use for it. So I would say that Ethereum scaling on L1 is not out the window. It's just servicing a different entity now. It's not servicing the end user. It's servicing layer 2s, and then layer 2s are servicing the end user. So think of it like a business-to-business relationship. Ethereum is a business. The layer 2s are a business. Ethereum talks to the layer 2s. It exports its block space to layer 2s, and layer 2s can buy a block space off of Ethereum layer 1. And then layer 2s are a business to consumer. So the layer 2s sell its block space to consumers. And then that way, the consumers get like much cheaper block space, much cheaper fees, and get to do all their execution stuff on layer 2, and then layer 1 becomes this settlement layer for layer 2s, becomes this data availability layer for layer 2s. So hopefully that explains that there. Now that's on the sharding side of things. There are definitely other upgrades coming to layer 1 as well to scale it more, which will have a side effect or byproduct of layer 1 being more scalable, but still nowhere near as scalable as layer 2s, while also enhancing layer 2's scalability there. But yeah, you can go to l2beat.com to see all the layer 2s if you want to, but hopefully that answers your questions there. All right, a question here from the HD Sync who asks, hope you can help me find the answer for the following question. What is the theoretical and practical maximum of Ethereum network decentralization? E.g., is it 1 million validators or full nodes? What are the constraints? So I think when talking about or quantifying decentralization, it goes far beyond just the number of validators or full nodes. And I've talked about this a lot on the Refuel before, so I won't spend too much time on this, but I'll give a high-level overview of how I think about it. Basically, there is two forms of decentralization, or I guess technically three, but two main buckets. You have technical decentralization and social decentralization, and then the third one is economic decentralization, which I think is a subcategory of the first two categories, but just for the sake of argument, let's stick with the first two. So technical decentralization is what you're talking about. Number of validators, number of full nodes, number of different client implementations, for example, because we value client diversity in Ethereum, how easy it is to run a full node, right? What are the requirements? How easy it is to run a validator, all that, how geographically distributed it is, all that good stuff there. That's the technical decentralization side of things, which I think Ethereum does an excellent job on, right? Does a fantastic job. People can run, I mean, we could do better, obviously, but we do a really good job as compared to other chains. And I think the only other chain that's easier to run than Ethereum is really Bitcoin, right? And easier to participate in is Bitcoin, because Bitcoin inherently is quite limited. It can't do what Ethereum does. It's probably not even worth comparing the two, but in terms of technical decentralization, I would say that Bitcoin probably has the slight upper hand here, right? But that's how I think of technical decentralization. Then you have social decentralization, which is the social layer of Ethereum. What does Ethereum's governance process look like? Is it just a cabal of like 5 people making the decisions, or is it a vibrant community that come together and make decisions collectively at every phase of the governance process? I think Ethereum has a very strong social layer from that point of view. But then it goes beyond governance. It goes into things like, what are the Ethereum social layers principles? What are their priorities? Like, do we value open source? Yes. Do we value freedom? Do we value the ability for anyone to transact on the chain? Do we value censorship resistance? I would say yes. We're working on doing better on the censorship resistant front, but I would say that yes, we currently do. So there are those two broad buckets, technical and social decentralization, and you're going to get a biased and subjective view of both of those things. There is no objective way to measure most, I guess, like spokes of decentralization in my view. And it's funny because you can actually even say that the subcategory of both of those, as I mentioned before, is economic decentralization. And when I talk about that, it's more like, okay, what is the distribution of the token? Like, how much ETH is in the hands of whales? How much is it in the hands of VCs? Or how much is on exchanges? How much is being put to use? How much is staked, right? And what's the cost of attack on the network? Which, as I said, like, it's an economic thing, but falls into the technical aspect of it as well, because there are different chains that have different costs of attack depending on their consensus mechanism, depending on their makeup of how they look, depending on how many full nodes they have and validators they have, and all those sorts of things as well. So that's how I broadly look at it. And if you wanted to quantify that for every single chain, it's quite hard to do, because the ultimate test of something's decentralization is a nation state attack in my mind. And Ethereum is the closest thing, Ethereum has come closest to being, I guess, quote unquote, attacked by a nation state with those OFAC sanctions. And Ethereum's response has been amazing to it. I mean, yes, around 65% of the network is, I guess, like producing OFAC compliant blocks because of MEV boost. which I've talked about a lot before, so I'm not going to rehash it there. But there are 35% of blocks that will still process those transactions. So Ethereum is still censorship resistant. It is still fulfilling its promise here, and we are working on getting that number down as much as possible. And Ethereum is really the only network that has been tested like that. How well would Bitcoin fare in that environment? We don't know. How well would any of the other chains fare in that environment? We don't know. So we only really know with Ethereum right now. And the OFAC sanctions aren't really a concerted nation-state attack against Ethereum because they only sanctioned Tornado Cash. They didn't sanction Ethereum. Now, let's say a government or the US government wants to sanction Ethereum as a network. Could Ethereum survive that? If it did, I mean, it's debatable whether it would right now, but if it could survive that, right, that would mean that Ethereum truly is decentralized. That would, to me, be definitive proof that Ethereum is decentralized. Now, what does survive the US government sanctioning the Ethereum network itself mean? Well, it means that the Ethereum network runs just as it runs today, or I guess like a little bit less well as it runs today, but it still runs. It still services users. People are still getting the value out of it that they are today. Now, would that be the case? I don't think so. Because I think the ETH price would absolutely tank, right? So there goes economic security out the window. A lot of validators would go offline because they wouldn't allow to be validating on the network anymore. A lot of them are based in the US, right? Gone, right? Unless they wanted to risk it, which I don't think they do because it's up to 30 years in prison or massive fines if you're a US citizen. So you definitely don't want to risk that. Developers in the US, goodbye. All the developers building on the protocol, on the app layer, goodbye. They're not going to be there anymore unless they want to move countries, which I assume the majority of them probably don't want to do, right? And even if they do that, they're still a US citizen, so it's still illegal for them to interact with Ethereum. So yeah, I mean, and obviously any network can be sanctioned, but if by any government. But if the US government was to sanction Ethereum, I think the Ethereum network would keep chugging, but it would be a substantially different network than it is today. And you could argue that Ethereum is truly decentralized as a network, for all intents and purposes, but practically it doesn't really matter because most of Ethereum's value has evaporated because of the sanctions, right? So this is a very multifaceted thing here. This is, as I said, very subjective. There's a lot of nuance here. It depends on a lot of different factors, but hopefully that has given you a, I guess, like answer that you can kind of get value out of. So great question there, the HD Sync. Thanks for asking it. All right, we have a question here from Nick_BK who says, I just recently tried Aztec Network for the first time. It worked well. It seems like a similar concept to Tornado Cash, but more advanced. I recall a while back on the Daily Gwei, you mentioned privacy was a key area you'd be keeping your eye on in 2022 and beyond. My question is, can you comment on Aztec? How its functionality compares to Tornado Cash? And what is your overall take on the privacy landscape and development within the Ethereum ecosystem? So there's a major difference between Aztec and Tornado Cash. Tornado Cash is a one-trick pony, so to speak. It does mixing of ETH and some other assets, right? You put ETH and other assets in, it mixes it using ZK magic, and then you get them out, and it is incredibly hard, if not impossible, to trace those funds back to its origin address if you did it properly, right? So that's what Tornado Cash is in a nutshell. Whereas Aztec is going beyond that. What Aztec is doing is it's taking all transactions that it can, all interactions, all different kind of like DeFi things like NFTs, things like just sending ETH, and trying to add a privacy layer to it. And the clearest example of this is something called Aztec Connect, which basically allows you to do the transaction on Aztec, on the rollup, the Aztec rollup. Then Aztec will tap into layer 1 liquidity. Say you want to do a Uniswap trade, it will tap into Uniswap on layer 1, and then it will do the transaction privately at layer 2 so that you still get the benefit of Uniswap liquidity on layer 1 with the privacy on layer 2. Now, this is not something Tornado Cash does. Tornado Cash only mixes assets, whereas Aztec will allow you to encrypt or put privacy onto any transaction, on potentially any transaction that you do. So Aztec's scope is much larger than Tornado Cash's scope. In saying that, in terms of like what the current privacy landscape looks like, well, there aren't that many privacy tools available to us today because of, I guess, like, it's hard. I mean, privacy is quite hard to do right. And also the sanctions have kind of put a chilling effect on that since Tornado Cash got sanctioned in August of last year. But I think on that note as well, I'm very bullish on privacy still. Aztec recently actually rebranded from saying the word privacy to saying the word encrypted, which I think was a pretty smart rebrand, because even though encryption has been demonized by governments for the last 20 years, it's still a much less, I guess, like not toxic, but much less loaded term than privacy is these days. And that's just the way of the world. Like, it doesn't matter if it's right or wrong. That's just the way it currently is. So I think that rebrand is cool. Aztec have their own controls in place and their own monitoring in place in order to comply with any possible regulations. So I think they've announced before they have their own controls on their because they're the ones that are running Aztec right now, because Aztec as a network is centralized, but they have their own controls for monitoring for things like money laundering and terrorism financing and all that other sort of stuff, right? So just be aware of that too. But I think when it comes to true privacy, true decentralized privacy, it's going to be an uphill battle from here, because we've already seen that governments do not like this. The US government pretty much hated Tornado Cash because it allowed rogue nation states like North Korea to wash their funds, and that meant the US government wasn't able to track them. There's been a war on privacy and encryption, as I said, for the last 20 years, especially because of the digital age. And I think that there's a stigma around it as well. But in saying all of that, businesses need privacy. Businesses are not going to use these public networks unless they have guarantees that they are able to interact with it in a privacy-preserving way, in an encrypted way, which is something that Aztec is, I guess, like really building for. And I think they're going to find a lot of success in that area for sure. Hopefully that answers your question. All right, moving on to the next one coming here from DSI. So they ask, could it be possible to hack a blockchain with simple node infrastructure? Like, let's say someone bootstraps millions of full nodes on a proof of work network, but those nodes have malicious code that don't follow the correct rules. I know in the proof of work, the blockchain is the longest valid suits of blocks. So in theory, if someone was to run a miner associated with millions of invalid nodes, if this person proposes an invalid block, for example, moving coins out of an address without the correct signature, it would be written on the blockchain, wouldn't it? No, that's not how it works in proof of work or proof of stake. So I'll just use the proof of work example because I think it's simpler here. So in proof of work, the canonical chain is the chain with the longest accumulated proof of work on it. So just because you're running millions of full nodes doesn't mean anything, right? You have to do the proof of work in order to become the head of the chain. So for example, if you only have like one miner associated with it, your accumulated proof of work would be very, very low. You wouldn't have more accumulated proof of work than the canonical chain, the canonical Bitcoin chain, for example. So it wouldn't do anything. Now, the way you would do it is that you would need to have 51% of the hash power of Bitcoin. You would need to build a chain from a certain block. Maybe you change something in that block, and then you would need to become what's called the heaviest chain to replace the existing chain and become the canonical one that the full nodes agree on is the canonical chain, right? So you can't just do it by spinning up full nodes. Full nodes have to be full nodes are not going to agree with your version of the chain because it does not have the most accumulated proof of work. It is not the heaviest chain, so to speak. So hopefully that answers that. In terms of proof of stake networks, I mean, there are so many different flavors of proof of stake networks, but in terms of how it works in Ethereum proof of stake, this was actually discussed quite a while ago in the initial designs, something called a long range attack, where how do you stop someone from forking the chain and then basically staking their same ETH on that chain, right? Say they have like a million ETH stakes, just for an example here, and that's 51% of the network. How do you stop them from forking the chain? And then how does the chain know that the chain that their fork isn't the actual real chain? Because there's no proof of work, right? There's just kind of like attestation of blocks, and then there is finality after the 12.8 minutes or whatever, 13.8 minutes, whatever it is, right? So the way we deal with that is with slashing, and slashing doesn't solve every issue because there's the issue of kind of like finality not being met, maybe because most of the chain isn't attesting to the blocks, and then this chain splits off. But we handle that with both technical in-protocol slashing and the possibility of social slashing, which I've explained a bunch on the Refuel before. And the in-protocol stuff as well is the finality gadget. So once it's finalized, if you try to, I guess, go back on history, it would erase a crap ton of ETH, like 67% of ETH would be burned. I think all of it gets burned or most of it gets burned if you try to do that. So it's extremely economically costly to try and revert anything or to try and change anything after finality. Now, during finality, the cost is lower, but still very costly to do so because you would have to require the ETH, you'd have to require the validators. It gets very costly from there. So they definitely differ, and that's just Ethereum proof of stake. There are other proof of stake mechanisms that work very differently to that, but that is a general kind of gist there. So hopefully that clears things up for you, DSI. All right, a question here from El Coco No, who says, is the purpose of checkpoints on the Polygon POS chain to basically finalize the chain up to that point to protect against reorgs? Can you talk about this and explain a scenario in which the checkpoints give Polygon an advantage over the EVM sidechains? So I wouldn't say I'm an expert on this, but from my best technical understanding of how this works, the checkpoints will finalize the state of the chain but they can only be used to recreate the chain extra protocol if something was to go wrong with the Polygon POS chain. So what this means is that I believe there is no in-protocol mechanism to go grab that checkpoint from Ethereum and use it to restart the chain. It would have to be done manually by the Polygon POS chain validators themselves. So what they would do is that they would say, okay, we all agree that this checkpoint on Ethereum is the last healthy checkpoint of the chain. We're all going to start building on that checkpoint again, right? We're all going to start from that checkpoint. And that's how it would work. That's because the chains are separate. The Polygon POS chain, for all intents and purposes, even though it checkpoints, is functionally its own layer 1. It's not like a layer 2 on Ethereum that relies on Ethereum's validators. It has its own validator set to do that. So I would say that it has a slight advantage over other EVM chains, but it's not like it has the same advantage as a rollup does or a layer 2 on Ethereum does. And I would say it only marginally increases the security benefits of the Polygon POS chain. Hopefully that clears that up for you. But as I said, I'm not a technical expert on that, but I think that's the way it works from my understanding. All right, a question here from 0x4A4C who says, what is the cheapest / most efficient way to go from fiat in my TradFi bank account to ETH in my hardware wallet? How can you optimize price? I've heard of some DeFi services that will find the cheapest ETH price for you across multiple exchanges. How can you optimize fees from fiat conversion and wallet transfers? What about set it and forget it ways to set up recurring buys, transfer cheaply, efficiently? I'm curious what workflows people are using and how to improve mine. FYI, I'm based in the US. So this is going to vary, obviously, depending on what country you're in. Depending on what exchange you use, they have different fees. Depending on how comfortable you are with setting things like limit orders rather than doing the classic market buy on an exchange. So it's going to be hard for me to tell you exactly what the best way of going about it is for you. I know that Coinbase's retail, I guess like buy and sell, it has a lot of fees attached to it, but Coinbase Pro has less fees attached to it, or is fee free because you can set limit orders on there. So you would use Coinbase Pro instead of Coinbase, but there are other services that have less fees. There are some that do flat dollar fees. There are some that do percentage fees. So a percentage fee would make probably more sense for smaller buys, but a flat dollar value would make sense for bigger buys. So it really just depends, and you have to look at the different platforms and look at what fees they charge you in order to see. But that's for fiat to ETH or fiat to another crypto. In terms of crypto to crypto on chain, I would say you have two main things to consider. Well, three actually. You have the gas fees, you have the protocol fee. So for Uniswap, it's 0.3% for most pools. On other AMMs, it might be less than that. And then you have the slippage that you would incur. So the difference between these is that the gas fee is paid to the Ethereum network. Whether you're on Ethereum layer 1 or Ethereum layer 2, that gas fee is paid to the Ethereum network ultimately there, or at least most of it is on layer 2s, right? And some of it goes to the layer 2 sequences. So you have to consider that fee. Then you have to consider the protocol fee. So as I said, Uniswap is 0.3% flat fee. You can't get around that on Uniswap for most pools. That's what the liquidity providers are set up to charge. That's what you're going to be charged as a flat percentage fee on that. And then slippage. So say the token that you're trading has a very low liquidity. Say you want to buy $1,000 worth of it and you're going to incur 2% slippage. That means that you are going to lose 2% of your value instantly. So that's 2% there, 0.3% on the Uniswap trade. That's 2.3% that you're losing to fee/slippage. And then on top of that, you have the gas fees to consider, which aren't a percentage thing. It's a dollar value thing, and they can vary obviously depending on what network you're using and depending on what the gas price is at the time, and also depending on if you're measuring in dollar value, depending on the dollar value of ETH as well, right? So those are all the things you have to consider. In terms of the most efficient way here, I would suggest using a decentralized exchange aggregator such as Matcha or 1inch, but then I would even say you could go even further and use something called CowSwap or Cow Protocol, which is MEV, which protects you against MEV, which gives you even better an even better fill on your order. And I've used CowSwap a lot recently, and they've been excellent. I've been very, very happy with the service there. So I would say that CowSwap is probably your best bet for most efficient swaps, but 1inch and Matcha and other aggregators like Slingshot as well, they're just fine too. But yeah, that's been my experience there. But in terms of fiat to crypto, it's going to vary depending where you are in the world and depending on which exchange you use for sure. All right, a question here from Ripperdoc, who says, my question is which conference or conferences are the best to attend for enthusiasts, not necessarily the builders, developers, or VCs? So from my experience in terms of Ethereum conferences themselves for enthusiasts, I would say ETH Denver, ETH Connect, or Dev Connect, I should say, and DevCon itself. So Dev Connect and DevCon are run by the Ethereum Foundation. ETH Denver is run by the ETH Denver people. I think the Spork DAO they're calling themselves these days. But there are a bunch of other smaller events that are run through ETH Global, which definitely are more on the builder side of things. But the larger ETH Global events, they definitely cater more towards enthusiasts as well. But then there are other events like Permissionless that Bankless runs, which are probably much more enthusiast-driven than builder-driven. And then there are other wider crypto events that are less focusing on the builders and developers and more on enthusiasts. But your mileage may vary because some of them are just shill fests. Some of them are NFT specific, for example. Some of them are specific to other things like DeFi or Web3. But in terms of like a broad Ethereum-based conferences, ETH Denver, Dev Connect, DevCon, and some of the ETH Global events, depending on where they are in the world, depending on the size of it, I would suggest going to. And in saying that, I'm going to be at ETH Denver. I don't know where Dev Connect and DevCon are yet, but I'm hoping to get out to at least one of those. And I may be at Permissionless. It just depends if the dates work out for me. And that's, I believe, going to be in September this year. And that's run by Bankless and Blockworks. But yeah, other than that, I tend to avoid most conferences, not because they're not good, but because I'm not a builder or a developer. Not a hacker or anything. I don't participate in the hackathons. And also, traveling from Australia can be quite exhausting, especially to places like Europe and the US. So yeah, hopefully that answers your question there, Ripperdoc. Right, on to the next one from Destroyer, who asks, do blockchain projects generally have SDETs working on them, and do they test automation and CI/CD? I actually don't know what an SDET is. I'm going to assume, I'm just Googling it now. Software Development Engineering in Test, which I guess is something to do with testing. This is a developer question, I think, Destroyer, unfortunately. And I'm not a developer, so I can't really answer this. But I would say that anything that you're used to in the Web 2 world when it comes to this sort of stuff would translate over into the Web 3 world, because it's just code at the end of the day. It doesn't matter if it's decentralized or centralized code. It's the same. It's still code. Still needs to be tested. Still needs to run through automation platforms, and still needs to have DevOps behind it. And it may be different to how you do it in Web 2 because of the decentralization things to consider, but it's still very similar from my understanding. But maybe you can ask in the developers channel, in the Discord channel, and you'll probably get a better answer there than I can give you. All right, one here from JMillES, who says, you often talk about the discount that LSDs trade to ETH, but rETH actually trades at a premium, if I'm not mistaken. Could you talk about why and maybe some advantages? I love Rocket Pool, but that's a pretty significant hit to potential gains. So the reason why there's a premium is because people want rETH, basically. That's the really short and sweet of it. There's more people that want rETH than there is rETH supply available, so there is a premium. Now, where the opportunity lies here is in people spinning up mini pools. So for example, a mini pool requires 16 ETH and about 100 RPL to spin up. But if you spin up a mini pool using something called Rocket Arb, you are able to actually arb that premium and get the reward for yourself. So I've done this 5 times. So I set up 6 mini pools. The first one I didn't do it on, but I've done it 5 times with Rocket Arb, and I've gotten on average 0.33 ETH, free ETH, for doing that arb there. Now, that arb has remained because there is so much demand, because the staking pool is full. It has a limit of 5,000 ETH in there, and it's full right now. So how does that come down? Well, more people need to spin up mini pools, which will mint more rETH, which will make the rETH premium go down. And that will happen over time, especially, I believe, post-withdrawals. So I understand that that this kind of like limits the rocket pool growth because people don't want to buy rETH if it's at a premium. But there is also other solutions coming as well, not just withdrawals. They are going to be lowering the amount of ETH that is required for mini pools, so it can become more capital efficient for rETH to be minted. So this is going to go down, I believe, in February to 8 ETH instead of 16 ETH per mini pool, and then hopefully down to 4 ETH per mini pool, which will yield a lot more efficient rETH minting, which will allow rETH to come back to parity instead of trading at a premium, and allow rocket pool to scale better and rETH to scale better. So hopefully that answers your question. But if you want to ask more about this specifically, I highly recommend joining the rocket pool Discord channel. They are very, very helpful there, and they'll be happy to answer any questions you have about rocket pool. All right, another one here from Destroyer, who asked, do you think that any tokens on Ethereum could accrue value in a similar way that ETH does, maybe L2 tokens? So I generally don't give investment advice, and I generally don't talk about tokens other than ETH for maybe obvious reasons. I don't want to be seen as giving the investment advice. I don't want to be seen as shilling any particular token. I have positions in tokens other than ETH. I'm an angel investor in a lot of different projects, so it's very hard for me to talk, in an unbiased way about tokens. But in terms of something that it can accrue value in a similar way that ETH does, I don't actually see any other token doing that. And I can safely say that because ETH is such a unique and amazing asset, and it has worked so long and so hard to get to that point, that I believe it's going to be extremely hard, if not impossible, for pretty much any token to get to that point. Now, the major reason why I say this is because ETH is a store of value that has a monetary premium. Most assets, doesn't matter if it's a blockchain-based asset or a digital asset, doesn't matter if it's an NFT, doesn't matter if it is a real-world asset, doesn't matter if it is a real-world commodity or currency, will never achieve a monetary premium or a store of value status because there's simply not enough room to have 100 different stores of value in the world, because that would dilute each of them, right? And they would just share value across them. There can only be a handful of them that exist in the world. In crypto, there are only two, BTC and ETH. The rest of the assets are not store of values. They do not have much monetary premium, if any at all. And most of them are not even tied to an entire ecosystem like ETH is. Most of them are an app token or a layer 2 token. So from that perspective, they will never accrue as much value as ETH, in my opinion. So a useful analogy here is something like the US, right? The US has the US dollar, and it has companies within the US that have their own, stock tied to them, right? Or publicly traded stock or equity, and that's worth a lot less than the US dollar in terms of market cap. But in saying that as well, the US dollar is not a good store of value because it loses value over time, and these company stock prices go up over time. But in terms of just looking at it as a total market cap thing, the US dollar has a much greater market cap than any of the businesses in that work in the US, right? That exist in the US. So it's a crude analogy. It's not a perfect analogy because, as I said, US dollar is not a store of value. It has a monetary premium because US dollars are accepted everywhere. People want US dollars, but it is not a store of value because it loses value against everything else over time. Well, not everything else, but like a lot of other assets over time. But it is the best fiat currency today that exists today, right? Because it loses value. Other fiat currencies lose value against it over time. And the US dollar is a pretty good, has a lot of monetary premium because of the fact that it is a global reserve currency. So that's a crude analogy there. So from taking that point of view, I don't think any asset is going to accrue value the way ETH has. In saying that, that does not mean that ETH is going to be the best investment going forward, depending on what your investment goals are. If your investment goals are wealth preservation, and now I'm giving investment advice. This is not investment advice, right? This sounds like investment advice, but it's not. This is just how I view things. I'm not telling you what you should or shouldn't do. I just want to be very clear on that. But the way I view things, if your goal is wealth preservation, then you are not going to be doing degen stuff, right? You're not going to be YOLOing all your money into some random DeFi protocol or some random NFT, hoping that you get 100x out of it. You're going to be trying to preserve that wealth. Now, that could come in the form of buying ETH. That could come in the form of buying real estate, buying stocks, right? Buying less risky assets Even though you know the growth isn't going to be 100x from there, or even 10x, right, over a shorter period of time, even though you know it's going to just grow your wealth, well, hopefully grow your wealth slowly over time, you do it because you want to preserve the wealth you already have. Now, if you are someone who doesn't have much wealth to preserve, if you are just starting out in your investment journey, well, then it doesn't really make much sense for you to go into wealth preserving assets because you have more of a risk appetite, right? You can afford to lose more your small amount of money that you're putting into it for the chance of getting 100x. So let's put some dollar values here. If you have $1 million, right, and you've worked your way up to $1 million, are you going to risk that $1 million that you've worked your way up to by YOLOing it into things that give you 100x? No, most people aren't going to do that, right? I'll give you a potential for 100x, right? Yeah, okay, you could make $100 million, but how much risk are you taking? Are you going to hold it until you get to $100 million? No, you're probably not, right? There's a lot of different things that go into this, but just as a simple kind of answer here, that $1 million, you're most likely going to put that into something that preserves your wealth. Now, you don't have to do all of it. Maybe you only do 80% of it and you use 20% on your degen gambling stuff that you want to do to grow that wealth. That's fine. But you're probably going to put the majority into something that you think and you have relative confidence in that is going to preserve that wealth. Now, let's say you have $10,000. Well, you're not probably, and you're young. I mean, this is an age thing as well, because as you get older, maybe you have a family, maybe you have more commitments like a mortgage. Let's say you're under 30 years old, you don't have a mortgage, you don't have a family, which, I mean, under 25 obviously it applies more to, but under 30 I think there's a large chunk of people that do that. And say you have $10,000 you want to play with. Well, in that case, you're not going to be preserving your wealth. You're going to be like, well, I need to generate wealth here. So you're going to be taking riskier and riskier bets. Yes, your chance of blowing up is a lot higher. Yes, your chance of making it, getting that 100x is quite low, but you're still going to do that because that is the way that you think, that you believe is a way to grow wealth in a much quicker way than you would putting it into a wealth preservation asset, right? So from that point of view, you can other tokens can easily outperform ETH over time, but it's a lot riskier. You're not going to pick the winning one most of the time, and it depends on your situation. So for me, as it exists today, I'm not doing those YOLO bets anymore in any kind of size. Definitely not. Most of my wealth is in ETH because I believe that ETH is a great way to preserve my wealth. Now, that's my crypto wealth, or I guess like what's in crypto. I also have my house. I have like a car, right? A car is not a store of value, but I have other assets that are not crypto that I'm using to preserve wealth. So it just depends what you want to do. Depends on your level of wealth, depends on your risk appetite, depends on your commitments. I mean, I don't have a family, but still I plan to have a family relatively soon, hopefully, right? So I don't want to be YOLOing to things and be like, oh God, I just lost all my money. How am I going to feed my kids, right? So there's that to consider, and everyone's situation is different. That's why I say I'm never giving investment advice. I'm not an investment advisor, and you have to really consider your own situation. So hopefully that answers your question. I'm going to move on to the next one here from I'm Aaron, who says, is the fact that internet providers / telecom providers control the ability to access the internet a looming long-term centralization concern for you? How can we decentralize internet access before the telecom monopolies can censor our industry? So this is a bit of an elephant in the room. I think that generally, internet providers are quite decentralized across the globe in terms of how many there are, right? But when you look at a nation in a vacuum, they generally only have a handful of major telecom providers. In Australia, for the longest time, we only really had one called Telstra, which was very dominant. And then we switched to something called the NBN network, which marginally improved competition, but still, it's just a handful, right, of companies that control this here. And then when you're talking about the actual infrastructure itself, I mean, it depends if it's government owned, right? It depends if it's owned by private companies. And how many private companies own it. There's a lot of nuance there, but it is still the elephant in the room. It is still a big centralization vector. And the way we rectify this, well, it's very hard because decentralizing infrastructure is quite difficult. So let's take something like Elon Musk's Starlink, for example. That is an alternative to the telcos you have in your country. You can hook up to Starlink and get access to it, but that Starlink is still controlled by Elon Musk. Elon Musk is still at the mercy of the US government. If the US government told Elon Musk to do something with Starlink by a legal order, he would probably have to follow it. He probably would, right? And even if he wanted to do it himself, right? If he wanted to cut off access to some country because he just felt like it, he could do that as well. So decentralizing infrastructure is very, very hard, if not impossible. Rolling out infrastructure at scale is extremely difficult, and that's why it can't really be a decentralized thing. I know there are some projects that are trying to focus on trying to do this, like Helium, for example. But Helium, their main incentive was that you could quote unquote mine with the Helium boxes and earn tokens for it. But then that relies on the tokens being valuable to drive demand for the Helium boxes. Because if the Helium boxes cost, let's say $400, and you can't even recoup the cost because the token price is so low, or because too many people are on the network trying to earn the rewards and it diluted your share, well then most people aren't going to buy that box because there's no incentive for them to do so. So an infrastructure rollout, whether it's centralized or decentralized, is incredibly costly, but a decentralized one is even more costly because of the fact that you need the incentive there. And you need the incentive for people to want to provide that at scale. So yeah, hopefully that answers a bit of your question there. As I said, it is an elephant in the room. There's no good fix here. Really, at the end of the day, we just need to kind of accept that this is a potential risk. This is one way nation states can control the chain and work towards, I guess, just making people more knowledgeable about this. And also maybe doing stuff in your own country, maybe voting in governments that will work to break up any kind of monopolies that exist on telecom providers, making sure that they do things that encourage competition for them. And maybe even to a point where the government doesn't own all the infrastructure either, right? I mean, technically, if you really wanted to go to the end state of this, if the US government wanted to, I mean, they control the army, they could just tell the telecom providers, hey, all of your infrastructure belong to us. If you disagree, we're going to throw you in jail. If you try to fight back, we're just going to squash you with our army. Like, I'm talking about the extreme here. So when you're looking at like physical infrastructure, it's much harder to decentralize that than it is software, in my opinion, because software, yes, it lives on physical infrastructure, but the software that Ethereum lives on, like having a full node, anyone can have that on a solid state drive anywhere in the world. And there's lots of different solid state drive providers, but no one has access over that drive that you have locally on your own physical machine unless they hack you, right? And unless they come into your home, but it'd be impossible for I guess like millions of full nodes, for example, to be seized, or even tens of thousands to be I guess like found and seized. Even if they were, people around the world could just spin up new ones. It's very easy to do that because it's software rather than hardware based. And yeah, hopefully that answers your question. I went off on a little bit of a tangent there, but I think that answered the question. All right, we have one here from dfern.eth who asks, do you have any perspectives on the Cosmos ecosystem? Ethereum people and Cosmos people seem to get along quite well without the kind of combat seen between ETH and other Ethereum killer alt L1s. If my perception is correct, why do you think this? Why do you think this is? Well, okay, I think Cosmos is more friendly than the other ecosystems, but I don't think that Cosmos and Ethereum really get along that well. Cosmos fundamentally is being built in a way that disagrees with the Ethereum vision. Cosmos wants a central hub with all sovereign chains hanging off of it, whereas Ethereum is the central hub for layer 2s, which aren't sovereign chains. Layer 2s are inheriting Ethereum security. So it's a very, very different model to Cosmos. Cosmos wants every one of their spokes to be sovereign, to have their own token, to secure themselves, to be able to do what they want. Whereas Ethereum doesn't believe that that is actually scalable, doesn't believe that's the right way of scaling a blockchain. They believe that we should have rollups, but these rollups shouldn't be sovereign. They should just tap into Ethereum security to get all the benefits of that. Tap into Ethereum's validator set to get all the benefits of that. So my general perspective on the Cosmos ecosystem is that I'm bearish on it. Like, I'm not very bullish on it at all. I think it's an inferior ecosystem to Ethereum by far. I think it's inferior technically because I believe in the Ethereum rollup centric roadmap, and I believe that there are perverse incentives like there's a reason why the Atom token hasn't accrued much value. And for example, Terra was built on Cosmos technology, but Atom didn't accrue any value. The Luna token accrued all the value from the growth of Terra. So there is that as well. Whereas a layer 2 on Ethereum, properly constructed as a rollup, it doesn't leech value from Ethereum because it still pays Ethereum for its security. It still uses Ethereum as an asset on there, as a unit of account, as a fee token. It's still the same set of users. Ethereum users are layer 2 users, and layer 2 users are Ethereum users. So hopefully that explains that one there. All right, on to the next question from Noe1, who says, can you briefly outline / discuss Ethereum governance? Recently, during a discussion I had, I couldn't comprehensively rebut the accusation that ETH was mainly governed by a team of devs as either conform or fork. Would value your thoughts and ways, if any, we could improve. So the Ethereum governance process is quite involved. It's mainly captured by something called the EIP process, or the Ethereum Improvement Proposal process. So when any change is made to the Ethereum network, it has to go through this EIP process first, and this EIP process has a bunch of different stages, which you can go and look up on the ethereum.org website if you want. I don't know all of them off the top of my head. But basically, the high-level overview of how this process works is that someone comes along and says, hey, this is my idea. This is the EIP that I've created with the, details of this idea. And then they work through that and work through the different stages to get that to mainnet. It is a long process to get it to mainnet. It doesn't just happen overnight. It requires a lot of work, both on the research and development side, as well as the governance side. Now, to give you some examples of how things get accepted or rejected. So there is an infamous EIP, which is EIP 999, which was submitted by a core developer called Afri, who worked on the Parity Ethereum client before Parity was sunset back in, I believe, 2018 or 2019, where the EIP suggested unfreezing some amount of ETH. I think it was 300,000 ETH, or probably more than that, that was frozen as part of the Parity multi-sig bug, where essentially these funds were frozen forever because someone deleted a library contract that was needed by this contract, by the multisig, in order for people to be able to access their funds there. Now, 300,000 of that ETH actually belonged to Parity's sister company called the Web3 Foundation, which was building Polkadot, which is something Parity was heavily involved in. Now, at the time, when this EIP was submitted, people were like, well, no, straight away. Like, as soon as we saw the EIP, the governance process started from there. The Ethereum community was like, no, this doesn't make any sense. This is a slippery slope. If we unfreeze these funds, that means we have to pretty much go back and through the chain and unfreeze everyone's funds, and it becomes very subjective. Do we reverse hacks because of this, or other hacks because of this? Do we unfreeze funds that people sent to the burn address? Do we unfreeze funds that were sent to the burn address as a means of sending them there in order to delete them forever, right? And there's all these other subjective stuff that comes into it. So even before this EIP entered any kind of like research or development phase, the social governance stepped in and basically said no. And the social governance is the Ethereum community itself. It includes everyone in the Ethereum community, whether they just be casual community members, whether they be core developers and researchers, infrastructure providers, other stakeholders like exchanges. None of them really chimed into this, but it was really the core Ethereum community that just outright rejected this before it even got off the ground. Basically said no, right? So that was rejected. Now, let's say it wasn't rejected at that stage. Let's say it went through the research and development phase as time went on, and it got to the point where it was slated for inclusion. And the community was still saying, basically, no, we don't want this. This actually happened with something called ProgPower, where essentially it got to some of the final stages of getting included on the Ethereum mainnet, but then it didn't because social governance got really loud about this. It got to the point where social governance was like, we don't want this at all, right? This is not something that is going to benefit the Ethereum network. We believe that there are perverse incentives here. We believe that there are backdoor deals going on. We don't believe ProgPower is an upgrade that should come to the Ethereum network. And ultimately, it was decided by the community that this was not going to happen. The people that were supporting it, even in the core dev arena, who I would say they don't control the chain, but they do have more influence than just your casual community member because they are core developers, right? They do have more of a say. They do have merit to their words. Even they back down because they're like, this is not popular enough in the community. This is not something the community wants. So this is not something that we feel comfortable supporting anymore. And even if they did feel comfortable supporting it, even if they all wanted to just push it through, even though the community didn't want it, the community and the people running the infrastructure and the full nodes don't have to adopt this code. They can basically say, we're not going to run the code that contains this upgrade because we do not believe that this is something that the community wants. This is not something that myself as a node runner or as a miner or as a staker wants in the network. And you can run the software. That is the last line of defense if all else fails. But to get to that point takes a lot of work, right? And it takes basically, if you wanted to get something pushed in to the network, you would have to convince over 51% of the full nodes to upgrade to this. And if the majority of the community is against it, then you will never convince the the full nodes to include this, and even if the core developers wanted it to happen, it wouldn't happen. So that is the governance process in a nutshell, from a high level overview there of how things work, how things have been stopped, and how things have gotten really far and been stopped, and what would happen if things had gotten so far to the point where it was slated for inclusion, and then people just didn't run the nodes, and then it just wouldn't get included on the network. The network rules would not change because it didn't go through a network upgrade or a hard fork, or if it did, only like 20% of the nodes were upgraded, then that would fork off, and that wouldn't actually be the real Ethereum chain. The real Ethereum chain would be what the community said it was, would be the 80%. So that's how it works from that perspective. In saying all of that, even the most popular upgrades take a long time to come to the network. EIP 1559, the most popular Ethereum upgrade by far besides the merge, took 2.5 years to get into the network, right? 2.5 years. And I can't stress how popular this was. Literally everyone in the Ethereum community wanted this. There was probably maybe 5%, if I had to put a percentage on it, of people that didn't want this. And guess who those people were? Miners. Why didn't miners want this? Because it cut directly into their profit margins. So we can just do a one-to-one mapping there of why they didn't want it. There's no kind of like shady backroom deals being done here. There is no guessing here. We know exactly why miners didn't want it, because it hurt their bottom line. But other than that, everyone wanted it. Still took 2.5 years, right? The merge. Everyone wanted proof of stake since day one, still took an extremely long time to get into the network, right? So when looking at things, when looking at how to change the Ethereum, like change the Ethereum protocol rules, it is an extremely involved process. It takes a lot of input from a lot of different people. There are a lot of moving parts here, and if all else fails, if every single other stage fails, and the upgrade gets coded up, it gets put out there, then people can just simply say, I don't want to run this software. And that's it. It wouldn't happen. The chain wouldn't upgrade. The chain would be the same old Ethereum we're used to without that upgrade included. And then we'd have to deal with the fallout from that, right? There'd be social fallout, but the Ethereum network wouldn't change. It would still be the same Ethereum network that the community wanted to stay on and that the community all loved. But yeah, hopefully that answers your question, Noe1. I know it can be complex, but this is exactly how it works in Bitcoin as well. It's just that Bitcoin doesn't want to do any upgrades on its network. So with Ethereum, we don't do that. We do want to do upgrades. So there is a precedent to upgrading, and there is a governance process that needs to be adhered to. But this is the same in Bitcoin. The Bitcoin core developers could tomorrow code up a change to Bitcoin, push it to the branch, and then the Bitcoin users or node runners could decide, or the community could decide on whether they wanted to actually go through with this or not, the same way the Ethereum users do. All right, some questions here from Shawman, who asks, question about the ultrasound money site. The only section I don't understand and appears to be the most important with respect to the Ether long-term price is the monetary premium. I see gold is estimated at 10 in the chart. How is that calculated? How can we track Ether's monetary premium? So a monetary premium is quite a debated thing in the world. My definition of it is an asset that has a strong network effect, but also has a way to accrue value from that network effect. So a asset that has a monetary premium that is not a store of value, I think these things go hand in hand, is the US dollar. The US dollar doesn't accrue value into itself, right? But it accrues value for the US, which is what it's supposed to do. Whereas the ETH as an asset accrues value to itself from its monetary premium, from its network effect, from its use in DeFi, its use as money, its use in staking, its use, and as that usage grows, ETH as an asset accrues that value, and then that passes that value to the Ethereum network. Whereas the US dollar doesn't, even though it has a monetary premium, because of its network effect, it doesn't hold that value. It drives that value back to the US government, back to the US as an entity, and the US dollar obviously has value as a reserve currency, and its network effect keeps growing, but it loses value against like other assets over time because of its inflationary nature, right? So, and because of its not just inflationary nature, but because of the fact that US dollars are not something people want to hold, they want to use it as money, right? They want to spend it. It has a very, very high velocity. It moves it changes hands a lot, whereas ETH maybe necessarily doesn't do that, right? Because it's used in a bunch of different ways as I outlined. So that's my own subjective view of things, and I think Ultrasound Money, the website, has its own view of this as well. But the reason why gold it has such a large monetary premium is because gold has a massive network effect, right? That's built up over thousands of years, and it also is also like ETH, where its network effect brings value to itself, and it increases its monetary premium, which makes it a store of value as well. Whereas the US dollar is not a very good store of value, has a strong monetary premium. So in my eyes, those two go hand in hand. That's why gold is rated so highly. But I mean, I obviously think ETH is a better asset than gold, so I think that ETH should be worth more than gold, and ETH should have a high score like gold. But ETH needs to have more of a network effect. It needs to have nation states buying it, right, and storing their value in it. That is really the thing that it needs to beat gold, because gold obviously is held by nation states. They collect it, they keep it in their own vaults, whereas if one day ETH is, and I'm not talking about like small nation states like El Salvador with Bitcoin being on their balance sheet. I'm talking about like big nation states, ones that have huge economies, right? Let's say the top 10 nation states, the top 10 economies in the world, if they started putting ETH on their balance sheet, you bet your ass ETH's monetary premium is going way up, and its store of value properties are going way up as well, and it's going to get closer to gold in terms of its score here. All right, your second question regarding LSDs. I do believe they will follow a power law distribution where the top LSD takes 80% plus market share long term. If so, hasn't Lido already won? So I struggle to answer this question because it's hard to say, and there's not really a precedent here. So right now, if you looked at the way the LSD market share is, as you mentioned, Lido, or it already has a very large market share, you could say that it's a winner-take-most market. But I don't think it works out like that long term. I think that there are going to be a handful of big players. I think Lido will be one of them. I think that Rocket Pool will obviously be one of them. But then you can look at the exchanges like Coinbase and Binance that have their own LSDs as well. And then if you count those as LSDs, right, then Lido's market share isn't actually that big compared, because these exchanges have lots of ETH staked with them. So I think the line between pure LSDs and exchanges with LSDs is blurred now. And I think that you have to basically lump all staking services that have an LSD attached to it as an LSD service. So from that perspective, it already isn't a power law. But if you want to take just pure LSDs like Lido, like Rocket Pool, like a couple of others out there, then yeah, Lido has the biggest market share right now. But that's because it had a big head start. It's because withdrawals aren't enabled. And I believe longer term, once withdrawals are enabled, we're going to see a much healthier ecosystem there. I believe that once Rocket Pool becomes more efficient, we're going to see a better ecosystem there. We're going to see better growth with Rocket Pool. But the way I look at it is that LSDs and centralized exchanges or centralized service staking providers are very blurred, because when you look at it, Lido, yeah, okay, it's 29 different operators, but they're all centralized, right? Lido is just the entity that sits above it. And then from that perspective, Lido, the LSD looks very much like a centralized exchange, except it just distributes its stake out. But then it depends on where those operators are, how detached they are from each other, how independent they are from each other. And yeah, I mean, it gets very murky from there, it gets very nuanced from there, but hopefully that gives you my view of things. All right, another question here from Videnton.eth, who says, Anthony, do you get approached to participate in other crypto podcasts out there? Haven't seen you on others except Bankless. Do you avoid many of these podcasts on purpose? You have a strong voice, and it would be great for you and Ethereum to share your perspectives on other well-known podcasts such as Unchained and Empire, amongst others. So I have been approached by other ones in the past, and I've been on other ones other than Bankless in the past as well. I mean, I recently was on Whack Attack's Rocket Fuel. I've been on Altcoin Daily before. I've even been on Ivan Van Tech's podcast before, or YouTube channel before. But yeah, I mostly have been on just Bankless and obviously Daily Gwei. I'm not on too many others. I haven't been approached by Unchained and Empire yet, not that I know of at least, but I would go on Unchained and Empire. But in saying that, there are a lot of ones that I avoid. I avoid most of the crypto YouTubers. For example, I probably wouldn't return to Ivan on Tech's channel. Altcoin Daily, look, it's kind of a fine line, because pretty much all of them do the same thing, right? They play the algorithm, they do the clickbait, they shield tokens, but they have a lot of reach. And the altcoin daily folks are actually really friendly. I like talking to them both. I thought the conversation was really great, but they definitely are slaves to the algorithm, right? And I don't fault them for that. That's just the way things are. But people have nuanced views here. And me being me, and me being, I guess, as protective of my reputation as I am, I just don't feel too comfortable going on many of them. I'm happy to go on Bankless because I believe Bankless is aligned with my values. I believe David and Ryan are absolutely awesome, but the majority of podcasts out there, I probably wouldn't ever go on. I know it would be good for reach and would be good for educating the masses, but I would take a reputation hit for doing it. For example, if I went on BitBoy's channel, I would take a massive reputation hit. I would feel gross doing it. But in saying that, he has a massive reach. I'd reach new people and maybe guide them and maybe get them onto Daily Gwei where they can actually learn the proper things about crypto without being shilled tokens. But I don't think it's worth the reputation hit for me. I don't think it's worth me feeling like shit about it because I would honestly regret it straight away and I'd feel disgusting doing it because I have zero respect for BitBoy. I think he's one of the worst actors in this space. But yeah, I mean, it would be good for reach, right? It'd be good for reaching new people. But that's the fine line that I have to unfortunately tread, or fortunately, and that's just the way I view things. All right, one here from Este Benu. Hopefully I said that name right. So, hi Anthony, how do we ensure that the usability of Ethereum as an ecosystem, especially L2s, doesn't suffer due to fragmentation? Things such as the need to bridge between L2s and scattered liquidity seems like bad user experience. How can we interconnect these layers better and abstract the infrastructure away so we end up just using Ethereum again? I think that it'll all be abstracted away by the front ends, by the wallets that build on top of the protocols that do the abstraction, such as the bridges between these different L2s. And then when we have things like proto-Danksharding, or Danksharding on Ethereum layer 1, you'll be able to do cross rollup communication atomically, right? But in saying that, I think the crypto ecosystem has over obsessed about atomic transactions and composability. The web as it exists today, like Web 2, doesn't actually work like that. Web 2 is very asynchronous. So synchronous means that things happen at the same time. Asynchronous means that things happen in a linear fashion where basically you say, hey, I want to do a thing. And then you wait like 5 seconds and get a reply from the other side. It says, okay, you can do the thing. And then that replies to you. I mean, this is exactly how the internet works. And there's an act to it. There's an acknowledgement when you send a ping, then it pings you back. It's very asynchronous, right? Rather than synchronous. And I think in crypto, we've been spoiled with synchronous transactions and composability that stems off of that. But things can be built in a way where it's composability and synchrony is not assumed. And you can do them in an asynchronous way where essentially, for example, you could do a transaction from Arbitrum. You could say, hey, I want to buy this token on Uniswap, but I want to do it from Arbitrum. I want to buy this token on Uniswap that's on Optimism, but I want to do it from Arbitrum. Well, you can do a thing asynchronously, do an async transaction where essentially Arbitrum says, okay, initiating transaction to the I guess like Uniswap or through a bridge, for example, through Hop, for example, do the Hop transaction. Then the Hop transaction gets finalized on Optimism. Then Optimism gets the message and says, okay, I'm going to do the swap on Uniswap. And then it does the swap. And then once that's completed, the Optimism network gets the message again and says, hey, send these assets to back through Hop to Arbitrum to this user. And then all those steps happen in an asynchronous fashion, but the end result is still the same. So maybe you have to wait a minute for this to happen. I don't know. It's hard with finality as well because it depends on the bridging. It depends on what the rollups allow for. But say you just wait a minute for that transaction to finalize, that's still the same experience that you would have, or a similar experience that you would have on Ethereum layer 1 with doing everything in a block where you have to wait maximum of 12 seconds if you pay the right fee because that's an Ethereum block there. So I think that's going to be a very popular end state. I do think there are going to be some ways to do it faster than that where the service that you're using takes on the risk, for example. So it basically acts as okay, well, I know this transaction is going to complete in like 10 minutes, but I know my user wants their assets now, so I'm going to front the assets for them, take a small fee for doing so, and then I'll settle it with the back end later, so to speak. And that's actually how a lot of the banking system works today as well. Obviously, it's inefficient, but we can improve it drastically with on-chain stuff. Instead of it taking 3 days for settlement, it only takes 10 minutes for settlement, and then the provider fronts the settlement for the user. if the user doesn't want to wait for that 10 minutes, for example. So those are some ways it can work. But yeah, I think we're going to get there. I think we're going to improve the user experience to the point where the user doesn't see any of this happening, and they're going to have a wonderful experience that we're all used to on Ethereum layer 1. All right, one here from Dev 22x long ETH. I hope you're not 22x long ETH. That's probably going to get you liquidated. But they ask, what's your view on Starkware as an L2? Will it become a threat with increased adoption for Ethereum, or will it add more value as it sits on Ethereum? Curious, as they seem to be developing a different design compared to other ZK L2s. So they are definitely developing a different design where they're not focusing on ZK EVM. And even though they're building a ZK EVM, they are focusing on building their own ecosystem built on the Cairo language on Starknet, which is not an EVM network. It is their own network built on StarkX, I believe. And they have Cairo, which is not Solidity. It's their own language. I don't think they're a threat to Ethereum. I think they're maybe the least Ethereum aligned L2, not just because of their architecture, but also just things that I've seen over time. I think that their token distribution is pretty bad. But if I had to pick up negatives about Starkware, but generally I think Starkware is a net positive. I think they're doing a lot of amazing work. They're doing different architecture than the rest of the L2s or most of the other L2s, but that's totally fine. We want different things to blossom. We don't want just everything to be EVM. In saying that, I do believe that there isn't going to be that many other ecosystems other than the EVM ecosystems that actually take off, that actually accrue network effect. I think Starkware will probably be one of them, but they definitely focused on a different market share segment, a different, I think, type of user than the other L2s are focused on. Also, mainly because of the lack of EVM compatibility, but also because they seem to be focusing on more, I guess, like B2B relationships rather than B2C, but it remains to be seen kind of like how that shakes out as well. All right, one here from RH who says, what are the Ethereum values principles that resonate with you most? On a global perspective, what are some of the things that you wish to see Ethereum solve for the world? I'm interested in your take for the long-term horizon, 10 to 20 years and beyond. So I think the principles that resonate with me most, if I had to pick just a few of them, would be obviously decentralization, but I guess that's a bit of a cop-out. Censorship resistance, because I believe without censorship resistance, a blockchain is useless. Freedom to transact, which kind of comes into censorship resistance. Open source, I believe open source is a must. I believe everything needs to be open source on a chain. We need to be able to verify what you're interacting with on that chain. And I believe the last principle, which I think is more of maybe a meta principle on top of all the other ones, is I believe that a strong sense of ownership, right, over not just the network, but of your own assets. And that's why I'm such a big proponent of self-custody. Because without a strong sense of ownership and without a strong sense of like a stake in the network, I don't think you can actually care about the other values that much. Because if you don't have a personal stake in the network, whether that be emotionally, financially, or some other way, then you probably aren't going to care about the fact that Ethereum is, censorship resistant. It offers freedom to the world, freedom to transact. It's open source. It doesn't discriminate. You probably don't care about those things as much that if you have a stake in the network. So I believe that ownership is incredibly important here, and that's the meta, I guess, value that probably sits on all of them that resonates with me most. Now, let's break the ownership value down a bit more here. Do you feel like you have a strong ownership over the network or in the network? Do you have a strong stake in the network if it's VC infested, for example? No, I don't. I don't feel like I would have a strong stake or a strong ownership of the network in pretty much any other L1s, because most of them are VC infested. They have very big investors in them that have the majority of the token supply, that have outsized financial influence over the network, that basically influence the development of the network. And from that perspective, I don't feel any ownership over it at all. I don't feel like I could have a stake in that network, so I don't. Whereas with Ethereum, it's the complete opposite. There are no big VCs in Ethereum. The biggest ETH holder was Joe Lubin, who has basically been whittled down on his ETH from funding Consensus, which was helping the Ethereum ecosystem grow, especially in the early days. But other than that, the ETH is very well distributed compared to these other networks. There is a very vibrant community of ETH holders, a very vibrant community of people that stake ETH that they've held for a long time, that participate in staking as solo validators or as running something like a Rocket Pool mini pool. There is a very vibrant Ethereum community that takes ownership over governance and participating in governance. That's another big thing as well. So from that perspective, that's why ownership for me resonates so strongly and applies so strongly to Ethereum and basically lifts up all the other values because of that, right? Because of the way Ethereum is. Can that be bought? No. Can that be, I guess, like developed over time? Yes. Are there going to be other networks to develop this? Maybe. Is Ethereum the only one that has this right now? No, but it's the only smart contract chain that has this right now. The only other network that has this is Bitcoin, and Bitcoin's actually losing this over time. It's losing its sense of ownership, I believe, and sense of stake in the network. It's losing its other values over time. It's eroding them by being so ossified, so kind of like, I guess, cult-like, so steadfast in just sticking to one thing and that's it. I believe it's losing it. I believe Ethereum is doing the opposite of that. I believe Ethereum is embracing its values and its principles and its ownership. I believe Ethereum is becoming more widely adopted with people. It's becoming more open to things than it was in the past. It's because of the L2 rollout as well. We have all these expressive L2s on top of Ethereum layer 1 that can do their own things, have their own community values. And I think that all adds to the bottom base layer of Ethereum and adds to Ethereum's value. So hopefully that answers your question. I didn't really have that prepared. That was just off the cuff, but that's what resonates strongly with me. All right, you had a follow-up question where you said, in a future where the Ethereum roadmap has been completed, what would you like to see happen? So I actually answered this on Refuel from, I believe, last week, where I was talking about Domothy's tweet where he said that he believes long-term Ethereum is going to enter a phase of homeostasis instead of ossifying once its roadmap has been completed, where essentially it doesn't upgrade as frequently, but if something needs to be fixed or something needs to be upgraded, the Ethereum community is open to doing that instead of just being like, okay, well, no, we're not doing any changes, no changes. We have to deal with this in other ways. But for my full answer to that question, you should definitely go check out one of my refuels. I don't know which one it was, but it's time-stamped where I talk about Domothy's tweet about homeostasis. All right, last few questions to get through. Arjun here asks, when you participate in all of these private rounds, do you use your ETH? No, I do not use my ETH. I use fresh fiat every single time. I convert the fiat to a US dollar stablecoin, and I send that US dollar stablecoin to the funding round. I have never sold any of my ETH. The only ETH that I have spent has been ETH for gas fees, obviously, and ETH that I've used to pay people. In terms of ETH that I used to pay people, I replenish that ETH straight away with fresh fiat. Now, I do that for tax purposes because under a certain amount, using ETH as money is tax-free. It's a small amount, but it's still better. It's more tax efficient for me to do it like that. In terms of gas fees, sometimes I'll replenish it. Sometimes I won't. It just depends if I've got the money to do so. I do regular ETH buys anyway, so it doesn't really matter in my mind. Maybe I just delay the replenishment there. But no, I never use my ETH. I've already said that I'm never selling my ETH. I stake most of my ETH. But yeah, I would never think of using my ETH to participate in these rounds. Next one comes from Flyer897, who says, what are your thoughts on staking as a service and what provider is regarded as the best? Why is this rarely talked about compared to liquid staking providers? So, as I mentioned before earlier in the AMA, I believe the lines are blurred between these kind of staking as a service providers and LSDs because some of them have LSDs, right? Like Coinbase is a staking as a service provider, but it has an LSD called CBETH. Then you have Binance that is the same thing, has BETH, right? So the lines are blurred there. But if you're talking about like pure staking as a service providers that don't have LSDs, I actually think that they're going to die out. I actually think that they're going to lose to the ones that do have LSDs because there's no real reason for you to stake with a service provider that does not have an LSD because it limits you. It's capitally inefficient. So I actually think they're going to lose to these ones that have LSDs. So I guess in taking that point of view, I don't regard any of them as the best. What I regard as the best in terms of the staking service providers that have LSDs attached to them is Rocket Pool, first and foremost, like at the top of the list. Like there's no second best when it comes to that, right? Solar staking obviously is above there, but solar staking isn't an LSD or isn't a service provider, staking as a service provider. Rocket Pool, number one. Buying rETH or spinning up a mini pool, doesn't matter, number one. Second would probably be Lido. Even though Lido cops a lot of hate, I think it's still marginally better than a Coinbase or a Binance, right?
And then third, I would say Coinbase and Binance. But it's up to you. Maybe you don't want to go with Lido because they already have too much control over the they have too much market share of the network, right? Or too much influence on the network in terms of their ETH staked. Then you go with another provider. Or maybe you don't trust Lido for whatever reason. You go with another provider. But maybe you don't want to go with Rocket Pool because you don't trust Rocket Pool. You go with another provider, right? So it's up to you who you want to go with. But my ranking is definitely obviously solo staking first, but and on the LSD front or on the staking as a service provider front, it would be Rocket Pool, Lido, Coinbase, Kraken. I don't know if Kraken has an LSD token, but I would trust Kraken over Binance personally, and then Binance, right? So yeah, hopefully that answers your questions there. All right, so one here from Shawman who says, even though you are not a huge NFT collector, if you had to, what NFT would you buy with 1, 10, and 100 ETH? I mean, because I'm not a huge into NFTs, I don't actually know the landscape very well. I would never use my ETH to buy any of the NFTs directly. Obviously, they're priced in ETH, so I'd have to buy a new ETH to buy it with. But I don't know. I don't really have a good answer for you here. I would probably buy a punk because I think punks are cool, and I know that they've got a big community behind them. Maybe a doodle. I like the art behind it. I like the community behind it there. But other than that, yeah, I don't pay much attention to NFTs, so I can't really give a good answer here. And by the way, that's not investment advice. Don't go buy these just because I said so. I don't have a good read on it. I can safely say I'm a noob when it comes to NFTs. All right, last a couple of questions here from two people. So Finch, should a staking noob start out with vanilla solo staking or Rocket Pool? Any reasons to prefer one way over the other? Well, I mean, if you don't have 32 ETH, you already can't be a solo staking operator. So I guess you're basically assuming that this noob has 32 ETH. I would say that if you're a complete noob and you're just starting out, it's kind of hard to say, because are you a noob to staking or are you a noob to both staking and computers in general? Because to be a solo staker, you need to have at least basic understanding of how computers work, even if you're following the really basic guides. Are you scared of using terminal, right? Are you scared of using the command line? Are you scared that you're going to screw something up? Well, in that case, if you're scared at all and you don't want to take the risk, then yeah, it's not worth starting with solo staking. It's probably worth going with Rocket Pool, right? But even then, in Rocket Pool, are you just buying rETH or are you setting up a mini pool? Because setting up a mini pool, I would say, is probably, I mean, I'll admit this. I think setting up a mini pool is easier than solo staking, but it's still using the command line. Are you scared of doing that? Then you're not going to be setting up a mini pool. You're just going to go buy rETH, which is fine. But right now there's a premium on rETH. Maybe you don't want to take that hit. But in terms of reasons to prefer one way over the other, look, this is an ongoing debate in the community, and I actually don't know my kind of like, I guess, strong. Maybe don't know is not the right term. I don't have a strong view on this. Solo staking, in my view, is the most decentralized, self-sovereign way that you can stake on Ethereum, right? There is no second best when it comes to solo staking. But it depends what your goals are. If your goals are maximizing your yield, Rocket Pool is going to give you more because they pay out rewards for you staking with them, right? Solo staking doesn't pay you anything out except the staking rewards you get from the Ethereum network itself, whether they be consensus layer, execution layer rewards, doesn't matter. Whereas Rocket Pool right now, at least, gives you, if you spin up a mini pool today, what it gives you is if you use Rocket Arb, you get the instant premium arbitrage from that. You get the normal staking rewards, right? I guess depending if you opt into the smoothing pool or not, it can be different, but you get the normal staking rewards. You get the RPL rewards, which are already going to be more than the normal staking rewards. And if you buy RPL you have to buy RPL to collateralize a mini pool with, and that goes up in value over time against ETH, you have also made money that way too. So in terms of if you're a profit maximalist, probably Rocket Pool's better for you. If you're a decentralization maximalist, probably solo staking is better for you. But then there are other considerations as well, as I outlined before. So it's not black and white here. It just depends what you prefer. And it depends what you want to do with Rocket Pool. Do you want to just buy rETH or do you want to be a mini pool operator? You're going to earn more as a mini pool operator than you are as just holding rETH. So yeah, it just depends what you want to do on that front there. And then you followed up with Finch with, do you think they will ever cap the maximum number of ETH validators allowed? I think I heard Justin Drake toss the idea out one time on a podcast. I think there eventually will be a soft cap in terms of active validators. So for example, let's say the soft cap is 30 million active ETH staked at any given time, but there's 60 million ETH staked. Well, that would mean that only 30 million ETH is active at any given time, which means that 6 months of the year, you wouldn't actually be actively staking as a validator, right? Half the time you would just be idle as a validator, and your rewards would reflect that, right? But in saying that, we don't know what this is going to look like yet. There has been discussion around this. I think they will cap the max number of validators, aka the max number of ETH staked on the network, but whether it's a hard cap or a soft cap remains to be seen. I think a hard cap would actually be pretty egregious. It wouldn't actually work, especially with LSDs, because there'd be premiums everywhere, and the premium wouldn't go down unless the ETH staked went down, which we don't know when would happen. So it would actually, I don't think a hard cap would work. I think it's much more likely that we get a soft cap where we just rotate validators through. Who knows what that soft cap's going to be? Is it going to be 30 million ETH? Is it going to be 50 million? Is it going to be 60 million? We don't know. We'll have to see how that plays out. But I don't think the cap will come anytime soon. Maybe when we get to 30 million ETH stake, there'll be serious discussions about it. But yeah, I don't see it happening within the next probably 2 years. But maybe it'll happen after that. But yeah, I think it eventually will happen though. All right, last, I guess, question from, or I guess clarification that Christy Cloudy wants. So they said, I would like to ask about Danksharding and how it will work. Do I describe the process correctly? L2s will send their bundles of transactions to L1. The specialized builders create one large blob of all the data. We will extend the data by using Reed-Solomon code based on polynomials, which allows us to reconstruct all the data, even if we know only a portion of it. Which is called data availability sampling, or DAS. Each validator will download 50% of the whole extended batch. Each of them will have a bit of different portion from this data. They can attest that all data is available. This is, from my understanding, a pretty good summary of how it works. Now, this is full Danksharding, not proto Danksharding. So the main difference between full Danksharding and proto Danksharding is that full Danksharding has data availability sampling and proto Danksharding does not. And I believe the expiry of blobs, I don't know for sure if blobs still expire under Danksharding, under full Danksharding, but even if they do, the expiry would be longer. But yeah, that's basically how it would work. Is that the whole network does not have to store all the data. They only have to store a small portion of it. And then we do data availability sampling on it to make sure that data is still available, even though we only have a portion of that data using the polynomials that you mentioned here. So yeah, that was a great little explanation there. I think that does a great job of explaining it, but I'm not an expert on Danksharding, that's for sure. So if you want to read more about it, everyone, just Google Danksharding, Google EIP4844. It'll give you a better breakdown there. But yeah, that's it for the questions for today. So thank you everyone for listening to me ramble on for, what is it, an hour and a half, just over an hour and a half here. Hope you enjoyed this AMA. I think I previously said that the cadence of these things would be every 2 weeks. I might stretch that out to like every month, because I think every 2 weeks might be too frequent, and it's a bit hard for me to do them every 2 weeks. So I may stretch that out to every month. So don't be surprised if there's a month that goes by before another AMA comes out. But you can start asking your questions today if you want. So join the Daily Gwei Discord channel. Link is in the YouTube description below. Go to the AMA series channel, ask it there, and I'll be sure to answer it on the next AMA that I do. But thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you on tomorrow's Refuel. Thanks everyone.